Hey everybody, Robert Klein here, Mortgage Terminator. What I'm going to do today is talk about how much money a person makes when they're dealing in real estate, or actually where they make their money. So the first thing I'm going to talk about is actually within their mortgage. So let's assume, how long would it take for the average family to save $10,000? So I would assume that maybe the average family, like if they really went hardcore, they could be able to save maybe about $400 a month. So $10,000 divided by $400 a month would be approximately 25 months. Divide that by 12 months in a year, we're looking at about 2 years. So it'd take to save $10,000 takes about 2 years to do it. Now, my parents, everyone's parents, their grandparents told them to pay down the mortgage. That's the smartest thing to do. So let's say they do put that 10 grand down on the mortgage. The question is, how much money did they make by putting down that 10 grand? If in your mind the number 10,000 comes, let me ask you this. If you had a credit card with $10,000 on it and you paid off your credit card by 10,000, how much did you make? Well, you didn't make the 10,000. You actually, all you made was the interest that you saved. So for example, if you put $10,000 on your mortgage and you had a 4% interest rate, you basically saved 4% of 10,000 every year, or $400 a year. More specifically, that would be $33 a month. So people out there would spend 2 years of their lives slave laboring to save that 10 grand, and at the end they're going to save 33 bucks a month. Not so good. Next part I'm going to look at is cash flow, and what is the cash flow worth. So what's cash flow? So let's assume you had a property and the income from the property was $1,500 a month from rental, and then your expenses for mortgages, insurance, tax, etc., let's just assume it's $1,000 a month. So your cash flow, your profit at the end, would be approximately $500 a month in your pocket, month in, month out. So how much is 500 bucks a month worth? So if we did a comparison, if you're thinking it's worth $500 a month, like how I originally thought, it's not exactly correct. Imagine, you sat down with a financial advisor person. He talks about saving money for retirement, and at the end, you save all this money and you want to retire and basically live off that cash flow of it. Well, what's the equivalent of 500 bucks a month? If you had a 3% term deposit, how much of those term deposits would you need to replicate $500 a month? So I'm putting a light here. Hikes, there we go. It's getting dark. 500 a month times it by 12 is 6,000 a year, divided by interest of 0.03 term deposit, is equivalent to $200,000. That's the value of cash flow from a property. Everyone spends all their time trying to focus paying off their mortgage and making that 33 bucks a month, where I spend most of my time trying to figure out how to get properties where they'll pay me for free, because what I'm building is that. The next part in terms of making money, one extra part, is appreciation. Don't mind my spelling. If you had a property worth 300 grand and it grows to 400 grand, how much did you make? Well, it's 100 grand, assuming you sold it. I know there's a lot, you can make a debate, well, you got realtor fees and etc., but I'm just trying to give you the general idea. Most people do not know how to evaluate the real values of cash flows. And by paying down your mortgage, by paying low interest money, that's really all you're making by paying that down. So that's the way I look at this. Any questions, feel free to email me or give me a call.